Hey, I get it. I get it. You need a lot of money and you need it now. You need $20,000, $30,000, $50,000 to either buy a car, used or otherwise. You need to fund college expenses. You need a big ticket item and you don't have the cash for it, or you don't want to use all your cash up. You certainly can't put it on your credit cards, but you're sitting on a lot of equity in your home. And you have a nice mortgage right now at a very low interest rate that you don't want to touch, so you don't want to refinance that. What do? Well, the answer is you get a HELOC, a home equity line of credit. I'm going to show you how to do that. You're going to get money in 7 days. Let's kick off this rodeo right now. Hi, folks. I'm the Mortgage Patriot, Kevin Fagan, here on your side, nestled in the hill country of San Antonio, serving proud Texans as well as homeowners and investors all over this country. So today we're going to talk about how to get money fast using the equity in your home with what we call a standalone HELOC or a second lien HELOC, home equity line of credit. That's what HELOC stands for. And we're going to show you how to get it fast. And we're going to show you the criteria on how to qualify for this loan. So let's do this right now. As we go over the content of this video, do me a favor, please, and hit the like and subscribe below. It really helps me and it helps you as I bring good information for you in the form of videos. I really want to build a great library for you to help you with your home purchasing needs, your investment, be it purchasing or refinancing techniques. All of this is meant to really grow the Mortgage Patriot community and just provide great solutions for you. So it really helps, again, if you like to subscribe, and let's take it from there. Let's talk quickly about what a HELOC is. And of course, we've mentioned it's a home equity line of credit. So what does that actually mean? Think of it like a giant credit card that's collateralized by your home's equity. So for example, you have a credit card, let's say it's $1,000 limit, and you just buy items throughout the day or in the month, clothing, gas, food, what have you. It applies to your card, and then you pay down your card at the end of the month or over time, as anyone does. So you still remain at that $1,000 limit. And if you're down to, say, $100, you have $900 worth of purchasing power on your credit card. Same thing with the HELOC, but much higher numbers. If you get a HELOC for $100,000 based on your qualifications, and you pay that down $50,000 over the course of, say, 2 years, you still have now $50,000 availability left on your HELOC, because that's the limit, that's the ceiling of your HELOC. So it works kind of like a credit card, but the numbers are just bigger. And so you're not going to be writing checks for $3 and $15. You're going to be writing checks for usually a minimum of $500 and forward. So let's look at some of the criteria first of how to qualify for the HELOC. Let's go over 2 easy qualifying aspects of this HELOC. The first one is debt to income. Debt to income is a ratio of how much debt you have total from your housing expenses to your non-housing expenses as a percentage of your income. So if you make, say, $8,000 a month before taxes, and your expenses, including all your housing expenses, are $4,000, you have a debt to income ratio of 50%, because 4,000 divided into 8,000 is 50%. And that is actually the maximum ratio that this HELOC allows. So your debt to income ratio after taking on this HELOC cannot exceed 50%. So that's the first criteria. Second criteria is pretty simple. It's your FICO scores. FICO scores need to be a minimum of 620. And the good news is, as your FICO scores improve or are greater, the more loan to value you're allowed, the bigger your loan is allowed on your HELOC. So let's look at some of that criteria right now. Let's start at the top here. If this is your owner-occupied home, you're allowed a maximum of $125,000 loan if your FICO score is 620 to 639. And you cannot exceed a maximum CLTV, I'll explain what that is, of 65%. So what does that actually mean? Let's assume you have a property and it's worth $300,000. And let's assume you have a first lien. In other words, your underlying mortgage is now $100,000. So you would say, well, I have $200,000 worth of availability. No, not really. You do if you sold it, maybe. But in terms of this loan, you have a maximum of 65%. That's that CLTV. In other words, your first lien of $100,000 and whatever your new HELOC value will be cannot exceed 65% of $300,000. So 65% of $300,000 is $195,000. So If your first lien is 100, then that means your second lien HELOC can be a maximum of $95,000. That's under the scenario of a credit score of 620 to 639. So going back to our chart here, you can see that as your credit score improves, let's say you have a 700 score. What can you get with a 700 score? Well, based on this chart here, on your primary home, you can have a maximum CLTV of 80%. And so let's go back to our example. You have a $300,000 home, you have a $100,000 underlying first mortgage. So 80% of 300,000 is 240. You subtract out your first lien of 100,000. Now you have room to have a maximum HELOC in this example of $140,000. Prior, we had an example of only being able to get a $95,000 HELOC. Now you can get up to $140,000 just by having a higher credit score. And so you can see down the chart, your maximum loans can go up to $400,000 with FICO scores of 760 or better, and your CLTV is capped at 75%. Lots of latitude there as your credit scores improve to get a bigger HELOC. Not bad. Let's cover one important aspect of the HELOC, and that is what they call the draw period. As we mentioned, you treat the HELOC like you would a giant credit card. So you're going to get the full draw of the monies. Let's say your HELOC is $100,000. You're going to get $100,000 cash or in your bank account day one. And then you're going to use that for whatever purposes. You're going to be hopefully paying that down and then redrawing off of it up to that $100,000 back and forth during the draw period. Well, what are the draw periods? Well, here we are. You can see the little chart here. Let's say you have a 15-year, you choose a 15-year HELOC. That would allow you to have a draw period of 4 years. During those first 4 years, you can treat it like the giant credit card that we talked about. Drawing in and out, paying it down, redrawing money's out of it. So let's say you do that for the first 4 years, because that's the limit. The remaining 11 years, it turns into a traditional loan with just a principal and interest payment monthly. So it no longer behaves like the HELOC that we've described after that draw period. As another example, if you chose a 30-year HELOC, you'd have 5 years of draw period in and out, doing the things of a normal HELOC until it converts into a 25-year normal principal and interest payment. Hopefully that makes sense to you. Let's close out with some of the benefits of having a HELOC. And the first one should jump off the page, of course, and that is flexibility. It has massive flexibility relative to a traditional loan. You just simply can't draw right off a traditional loan and pay it back and then re-extend credit to you. It doesn't work that way on normal loans. So here, with a second lien or standalone HELOC in your back pocket, you will be able to have that flexibility during the draw period that we described, up to 5 years, if it's a 30-year HELOC, of just back and forth, pulling out money, paying it back, pulling out money again. So wonderful way to finance all kinds of purchases without having to take on new loans along the way. You have one HELOC that allows you to do all these kinds of things during that draw period. A giant second advantage of the HELOC is that you do not have to replace your first lien. So if the HELOC product didn't exist, you would have to, if you wanted cash, you would have to refinance your entire first lien and get additional cash on top of that, which would be a disaster. Because why? Because we just came out of a period of very historically low interest rates. So your first lien right now, as you could probably tell me, has a very low interest rate to it. It could be as low as in the 2s, certainly probably in the 3s if you've refinanced it over the last 3 to 4 years. And so no reason at all to replace that with current rates on a new cash out refinance loan at 6, 7, maybe even 8%. Good golly. And that would be, your payments would be just outrageous, as well as your interest rate. The HELOC allows you to keep that first lien in place and just take your available equity and enjoy that flexibility that we've talked about already as that first advantage, just on that portion of your remaining equity. Great advantage of the HELOC. The last major advantage in my mind of the HELOC, if you already are thinking through all this, and especially if you have an investor mindset, and I have a lot of clients that certainly have that, is to use the HELOC as a way to purchase a rental home. We showed in that chart earlier that if you have a high credit score in the neighborhood of, say, 720 or better, your access to larger amounts of HELOC is allowed. So you can get up to $400,000 like we showed in that chart earlier. So imagine having access to, say, $250,000 in a HELOC, and you just go use that to buy a rental home. So now you bought a rental home with cash, and you can drive a better bargain when you're buying with cash, as you know. You don't have to qualify for an investor type of loan. All you need to have is access to your HELOC at, in this case, $250,000. You just write a check, boom, that house is yours. So it's a way of increasing your family wealth, your personal wealth, and your family wealth by acquiring rental homes with cash using the HELOC that you have in place. Tremendous strategy, great wealth building strategy, and some of the reasons why most people, certainly investors, use that HELOC function. So I truly hope all this helped you. So do contact me about this HELOC. It is a streamlined process, as I mentioned. I can have a check for you in 7 days if we both hustle on our sides. Call me, text me, book an appointment with me below in the Calendly. Otherwise, reach out at 210-317-6514. I am the Mortgage Patriot, Kevin Fagan, on your side. Make it a great one.